if you want to be able to predict the future and get results like this, you need to be able to spot signs, because like most of you are so blind that if I ask you what sign is the market giving you, like, you will be clueless and be saying something like, oh, the trend is in an uptrend, I will be waiting for price to reject at this point. There you mark your demand zone. Some will even say this price is going to go to the lower one because there is gbogbo tigbo, gbagba tigba, but that is actually a lie. And because you don't understand order flow, it is going to cost you your account, because you are going to mark, even if it's support or resistance, demand zone, breaker, block, abi FEG on your chart, and all of it would be liquidated because you don't understand order flow sign. That's why I'm going to firstly show you what the signs are on this chart, then show you how to apply it and take $50 to $1,000. Starting from the first thing you ignored, which is candlestick length, which is your best ally, because candlestick length actually explains where price moved in a particular period of time. And if price didn't move much, is that not enough sign to tell you that, or show you that there's not enough momentum in the market? Like, this is literally a no-brainer. Yet most people wouldn't see it on charts because they are always in a rush. They are not calming down. They are almost overstimulated by TikTok, so they cannot think, they cannot focus. That's why you need to drop that phone and kill down overstimulation, and then go to your chart and then start identifying small candles. And whenever you see those kind of stuff, you want to be expecting a reversal. And for the second thing you need to look for to understand order flow is look for the good and bad zone, because a lot of people, they always think the market is going to be bullish, but you need to focus on the bad side of things. You don't want to be looking for the good strategy but the bad one as well, because if you look for the bad, there is a high probability that the bad is going to happen. So if you had looked carefully, you would have seen that there was something like a resistance zone there whereby price rejected from. But a lot of people will be focused on the buy confirmation, the jati and that, and they would have missed this, and that was why they got liquidated. Which brings us to the third things you want to look for. You want to look for liquidity magnets, and one form of liquidity magnet is fair value gap, although there's more like liquidity, equal highs liquidity, equal lows liquidity, liquidity gap, the likes of that. But FEG was present here, and whenever this stuff is present, price tends to gravitate to any direction that it is. But you would have ignored all this because of all the countless entries that you see at the top there, and that was why you get slashed by the market again. So after you figure all this out, you want to go to your chart, and then you want to be spamming entries with conviction. That means you want to look at your chart and understand everything, like study every single thing that happened. And I'm going to be breaking down every single thing that happened here that made me come into the conclusion of buying at this point here, because just marking your zone there is not enough confirmation, because price was obviously rejecting from a supply zone. And if price is rejecting from a supply zone, I'm supposed to be selling, but why was I still buying? That's because there is more flow of orders pushing price back up than back down. Like, if you look at this one, you can see that the only confirmation for this one is just a supply zone and then another supply zone. But for the buy aspect, there was a support and resistance structure, there was a trend line structure, there was a demand zone, 50% mitigation, there's break of structure, there's liquidity, there's another liquidity at the top there, there is even a breaker block, not to talk of the snaky fair value gap at the top there. This is literally how you should train your eyes to see. You should train your eyes to see everything. So if you were to fail trading like breaker block, you will win trading the support and resistance, because it is still following the same bias. So basically, you want to be gauging both strategy. So if it's the negative strategy is more than the positive strategy, you want to go with the negative. If the positive strategy is more than the negative, you want to go with the positive. It is very simple. And then when you have spammed the entry, if you see price going up, that's why you want to do this. You want to start entering more position, and then you want to play on your chart 247. Like, you want to be studying, you don't want to play. And if you see that it just pops up small like this, you go enter, and then wait again, pops up small, enter, wait again, pops up small, then you enter. And that's how you want to be doing it. You want to be doing it. You don't want to be increasing the lot size like that. Just be giving it small, and steady. All those small and steady is going to compound to something crazy later. If you just go up, what do? You enter, you smash it. I don't want to smash it that big. Like, I don't want to allow the like the one down should be smaller than the one up. Instead, the one up should be smaller than the one down. So if there is a pullback, there's a high probability that the one down would foot the loss, and it will like stay like gallant till eventually price tend to like go up. That's literally it. And if you are done that, you can see insane result right here. You can see how price brutalized that higher time frame this thing, and that's when you want to start closing. So if you got value from this video, like, so click link in the description, and if you want your account managed, message me on Telegram, and I'll see you guys in my next video.